Okay, now we're going to talk about how transactions affect owners' equity accounts. And if you will look at your chart, once you take your chart out, look at the owner's equity section. I have arranged this so that capital, revenue, expenses, and drawing all fall under the owner's equity section. So they're all, if you guys see a classification, if you have one of these accounts, the classification of these accounts is an owner's equity classification. That's what type it is. So we're going to talk about all these things. Capital and revenue. They make owner's equity go up. Capital makes owner's equity go up because it's an investment in the company. So that's why the owner's equity or their stake in the company goes up. Revenue makes owner's equity go up because that's when the company makes money. So if the company makes money, then the owner of the company makes money. And so that's why their equity or their stake in the company goes up. Now, revenue, I want you to notice if you see the term sales or sold services, that's revenue, and that's what you need to look for. However, expenses and drawing make the owner's equity go down. Expenses are cost incurred as a normal course of doing business. So those make the owner's equity go down. And drawing, that's when the owner takes money out for personal use. You're going to see that catchphrase, personal use. It makes owner's equity go down. So I want you to think about that as we go through and talk about their normal balance side. So capital and revenue. These two, they make owner's equity go up. And if they make owner's equity go up, it stands to reason that their normal balance side is going to be a credit because owner's equity is on the right side of the accounting equation. So they're going to increase with a credit and decrease with a debit. On the other hand, expenses and drawing, they make owner's equity go down. So if owner's equity goes down, it's going to do exactly the opposite of what capital and revenue do. It's going to make owner's equity go down, so its normal balance side is going to be a debit. So I want you guys to use your chart as we're going through the next transactions and as you're going through your application problems. But that is why capital and revenue have a normal balance side of a credit, and expenses and drawing have a normal balance side of a debit. So let's see if we can erase all this now and start with our first transaction, which is on page 38 in your textbook. You should have read section 3 already. It's pages 38 through 42. And our first transaction says received cash from sales. Now, we're going to do the same things we've done before. We're going to say what two accounts are affected. Well, the two accounts that are affected with this transaction is obviously cash and sales. So we're going to go back to our chart. And well, first we're going to say what happened to each of these. Received cash, so the cash went up, so we want to increase cash. And we had sales. Well, now, if you have sales, if you receive cash from sales, that means you sold some things. That means your sales went up. It's like you're dinging the cash register every time. Your sales went up. So let's go here. Cash is an asset. If we want to increase cash, we increase it with a debit. And sales is revenue. If we want to increase sales, we're going to increase sales with a credit. So we're going to go back and we're going to increase cash with a debit of $295. And we're going to increase sales with a credit of $295. So we have $295 in debits, $295 in credits, and our debits and credits equal. The second one is sold services on account to Oakdale School. Now, if you see the catchphrase sold services, that is the same thing as dealing with the account called sales. So you'll either say sales consist of received cash for sales. I know you can't read my writing. or it'll say sold services on account. If you see either of those in the transaction, you're going to deal with the account called sales. And sales is revenue. Sales and revenue are the same thing. Okay, so sold services on account to Oakdale School. So we didn't get any cash. So Oakdale School is going to owe us some money. So we had sales, and if someone owes us money, it's an account receivable. So we have Oakdale School. Okay, so our sales went up because we sold some services, and the amount that Oakdale School owes us went up. Their balance that they owe us went up. So we're going to go back to this, and we're going to say, okay, what's going on? How are we going to increase these things? Well, accounts receivable, if we want to increase it, we're going to increase it with a debit. And sold services, right here, if we want to increase it, we're going to increase it with a credit. So we're going to go back, and we're going to increase our account receivable with a debit of $350. And we're going to increase our sales with a credit of $350. Debits and credits equal. Now we're going to go to our next transaction, paid cash for rent. What two accounts are we dealing with here? Well, we know we're dealing with cash because we see it in the title. So we've got cash and rent. What is rent? Rent is an expense. As I put in the chart up here, examples of expenses are rent, advertising, and repairs. So we've got this thing called rent expense. I think we've turned the page too, by the way. We are now on page 40. So our cash went down, so we want to decrease our cash, and our expense went up because we incurred an expense, so it went up. So we want to go back to our chart and say, okay, let's erase this. Erase this. Okay, so our cash went down, so we want to decrease our cash with a credit. And our expense, we have rent expense, it went up. Well, how are we going to increase our rent? We're going to increase our rent expense with a debit. So we're going to do rent expense debit, cash credit. So rent expense is going to be a debit of $300, and cash is going to be a credit of $300. And how many more do we have? Two more. Next one is received cash on account from Oakdale School. First question, what two accounts are we dealing with here? We see the word cash in the title, we know we're dealing with cash. Oakdale School, we know those guys owe us money and they're paying us some of the money that they owe us now. So this is an account receivable. Oakdale School. So our cash, we received cash, so our cash is going up. But the balance that Oakdale School owes us, that balance is going to go down because they're going to owe us less money. We're going to go up to our chart. We're going to look at our assets because we're dealing with two assets. We're dealing with cash. Nope, not prepaid insurance. We're dealing with account receivable. So if we want our cash to go up because we received it, we're going to debit cash. If we want our account receivable to go down because they owe us less money, we're going to credit it. So our cash is going up $200. And our balance that Oakdale owes us is going down $200. So we're going to make it go down with a credit. Last one, this is page 42. Paid cash to owner for personal use. You see that catchphrase, personal use. If you see that catchphrase, you know you're going to use the drawing account. Also, we see the word cash in the transaction, so we know we're going to use our cash account. So the two accounts we're dealing with, cash and Kim Park, not capital, but Kim Park drawing. Now, what's happening to the cash of the company? The company paid cash, so the company's cash is going down. And Kim Park's drawing account is going up because she took a draw. She takes a draw because she's going to use some of the company's money for her own personal use. Her drawing account goes up. So we're going to look at this. And the easy one is cash. We know that the company's cash went down, so it's going to decrease with a credit. So we're going to credit cash. And then the drawing that paid to owner for personal use, that drawing is going up. So we want to increase drawing with a debit. So we're going to debit the drawing account and we're going to credit the cash account. And we're going to credit cash for 125 and we're going to debit drawing for 125. Now, as you do your application problem, I know it's this way on the mastery problem. Yeah, on your application problem, you're going to have just one account for, you're just going to have one cash account. So every time you put a transaction in cash, you're going to put them all under cash. So let's say every time we dealt with cash in this, we started here, $295 with debit, and then we had a $300 credit. So we would have had a $295 debit here. We would have had a $300 credit here. So, and you'll put the dates out next to it. Let's say it was on the 12th. Let's say this one was on the 8th. So that's how we're going to do our, that's how it's going to be on your test. That's how it's going to be in your application and your mastery problems. And I'll be here to help you with that. But this finishes up our lessons for chapter 3.